Hi everyone, welcome back to the channel. In this video we're going to break down the huge swing in IREN stock over the last two trading sessions. After tumbling on Friday by 9.5%, losing $4.43 to close at $41.86, the stock staged a powerful rebound on Monday, climbing $4.07 or 9.7% to finish at $45.93. For a lot of investors that whiplash was confusing. What exactly changed between Friday and Monday? Was this just a technical bounce, or is the bullish thesis reasserting itself? And what should we be watching for next? Let's start by revisiting Friday's action because you can't understand Monday's rally without context. On Friday, IREN dropped sharply after downgrade from JP Morgan. The bank cut its rating from neutral to underweight and issued a $24 price target, essentially telling its clients the stock had run too far too fast and was richly valued relative to execution risk. Coming on the heels of a huge rally that had taken IREN from single digits to over $44 in a matter of months, the downgrade spooked short-term holders. Volume surged, profit-taking kicked in, and the stock slid nearly 10% in one session. That kind of one-day reset is often enough to shake out weak hands and test key support zones. Now fast forward to Monday. The same stock that had been under heavy selling pressure finished up almost 10%. There wasn't a brand new earnings report or a major acquisition announcement Monday morning. What you had was buyers stepping back in as the panic subsided. Support in the $40 to $42 range held, and with no fresh negative headlines over the weekend, traders and institutions saw the dip as an opportunity to re-establish positions. That combination of dip buying and short covering can produce explosive rebounds, especially in a high beta name like IREN. It's also important to remember that the bullish narrative that powered the stock to all-time highs last week hasn't changed. Analysts at Bernstein still have a $75 price target on IREN. Arete Research just initiated coverage with a buy rating, calling out the company's unique positioning in AI infrastructure and its massive GPU build-out. Those positive ratings didn't go away on Friday, they were just overshadowed by one bearish call. Over the weekend, those bullish pieces were circulated again in media and on social platforms, which likely helped restore confidence. So what's underneath that bullish narrative? It's the pivot from being just a Bitcoin miner to becoming a serious player in AI cloud infrastructure. Over the past year, IREN has doubled its GPU fleet to roughly 23,000 units. This isn't just a marketing claim. They've actually placed orders for Nvidia's latest B200 B300 Blackwell chips along with AMD MI350XS, spending around $674 million to secure capacity. Management has guided to over $500 million in annualized run rate revenue from AI cloud by the first quarter of 2026. That's a tangible, near-term target that investors can model. Being a Nvidia Preferred Partner also means they're at the front of the line for scarce GPUs, which gives enterprise customers confidence and differentiates IREN from peers who are still scrambling for supply. Meanwhile, the traditional mining business continues to generate steady cash flow. In August alone, IREN mined 668 Bitcoin, producing around $51 million in hardware profit. That cash flow helps finance the AI build-out without heavy dilution. It also gives the market a floor under the business model. Even if the AI ramp takes longer than expected, the mining side keeps money flowing in. With those fundamentals intact, it's easy to see why Monday's buyers saw the dip as a gift. Many large funds and fast money traders missed the initial rally and are looking for entries. When a name with a strong story pulls back 10% in one day on a downgrade rather than on a fundamental blow-up, that's often the signal they're waiting for. Add in the fact that short interest in IREN is still estimated around 10 to 12% of the float, and you have the recipe for a classic squeeze and rebound dynamic. Shorts who piled in on Friday had to cover on Monday as the stock ripped back up. Technically, Monday's move was also significant. The stock bounced right off a support zone near $41 to $42, confirming that buyers are defending that level. Closing back near $46 puts it within striking distance of the $47 to $50 band that marks the next big area of resistance. If IREN can break and hold above $50 with volume, it could open the door to the $60 to $75 range analysts like Bernstein are targeting. On the downside, a failure to hold $40 on another test would signal a deeper consolidation, perhaps back to the mid-30s. For traders, those are the key levels to watch. There are, of course, risks. Execution risk is front and center. Owning 23,000 GPUs is one thing, but monetizing them at high utilization rates with paying customers is another. Any delays in customer onboarding or infrastructure build-out could slow the revenue ramp. Power costs and grid stability are also critical. Running that many GPUs requires enormous, reliable energy supplies. IREN has nearly 3 gigawatts of renewable power secured, but any disruptions or cost increases could pressure margins. And valuation is always a risk. Even after Friday's dip, the stock is up massively year-to-date and trades at a premium to traditional miners. If sentiment shifts or the broader market sells off, pullbacks can be swift. But the counter-argument, and the reason so many investors keep coming back, is that the upside remains enormous if IREN executes. The dual-engine model of mining plus AI cloud gives it cash flow support and a hyper-growth segment at the same time. If management delivers even close to that $500 million ARR target by 2026, today's prices could still look cheap. That's why you see such a wide gap between bullish and bearish analyst targets. The bulls are valuing IREN like a high-growth infrastructure play. The bears are valuing it like a volatile miner. So what does all this mean for viewers heading into the week? Monday's rebound shows that there's still strong demand for IREN shares and that the market is willing to defend key support levels. It also underscores how volatile the ride will be. Big one-day drops can be followed by equally big rebounds. For long-term investors, the key is to stay focused on fundamentals rather than headlines. For shorter-term traders, the key is to respect the technical levels and manage risk. In your video, you can frame this as a story of resilience. After a sharp downgrade and sell-off on Friday, IREN bounced nearly 10% on Monday without any new operational news, driven by dip buyers, short covering, and the reassertion of the bullish AI cloud narrative. You can walk viewers through the catalysts, explain why the fundamentals remain intact, and outline what to watch next. GPU deployment updates, AI customer contracts, monthly mining numbers, and further analyst commentary. You can also pose the big question: was Monday's rally the start of the next leg up toward $50 and beyond, or just a relief bounce in a choppy consolidation? Lay out both scenarios. If support holds and fresh positive news arrives, the stock could quickly reclaim its highs and push through $50. If resistance holds and more negative analyst notes come out, we could see a retest of the low 40s. That balanced framing builds trust while keeping the overall tone constructive. Wrapping up, IREN's swing from Friday to Monday is a textbook case of high-growth stock volatility. The downgrade sparked profit-taking, but the underlying story didn't change. Monday's rebound suggests that the bull thesis is alive and well, and that plenty of investors still see value at current levels. As long as execution stays on track, the re-rating from crypto miner to AI infrastructure leader remains the dominant theme. Volatility will be high, but for those who can handle the ride, the potential rewards are significant. Thanks for watching. If you found this breakdown helpful, don't forget to like the video, subscribe to the channel, and leave your thoughts in the comments. Was Monday's rally a healthy reset on the way to new highs, or just a bounce before another pullback? I'd love to hear what you think.